Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I've got two paper money trades for you today. Netflix, which has earnings out after the bell, and of course, Nvidia. We have to look at Nvidia on a weekly basis. So first, let's get to Netflix, our first trade of the day. Remember, this is a paper money trade that we're looking at here. Now, Netflix is an interesting story because if you look at the year numbers, it's up 70+% for the last year. So people look at Netflix, it's got up to $941, now sitting around $863. But what they've done, remember, it wasn't that long ago that Netflix was $162. What caused Netflix to do that? Number one, dominance in streaming. They are the clear leader in streaming. They cut down on password sharing. They added the ad tier to what they do that has just exploded with new subscribers. 283 million global subscribers for Netflix. Their subscriber base is growing, their technology is getting better, and now their content is exploding as well. And when they start getting into things like sports and live TV that they're starting to dip their toe in, there's another whole level of success for this company. So looking at a trade like this, remember, they've got earnings coming out tomorrow. The expected move in Netflix, $66. That was down from where it was this morning. It was higher than that this morning. So what we looked at is something, normally you would think an iron condor, a short iron condor, is a range-bound trade, but it can be skewed. And that's what we did here today. We looked at a short iron condor, but we gave it a delta, which means what? Which we sold the 820, 800 put vertical, right? So a $20 wide put vertical. Why? Look at the chart. Last time it tried to sell off, it stopped right there just around the 8, in the 820s. So we sold a big boy $20 put vertical. Then against it, we looked at that expected move, sold the 930, 940 call vertical. Now think about this. We get about, when we put this in, it was about $8.50 in credit for this. So the risk on the upside, a $10 short call vertical, collecting $8.50, you have very little risk on the upside, only about $150. Now, the downside is where the risk is because you did a $20 put vertical. So an $8.50 short iron condor with a delta. We skewed it $20 wide on the put vertical and a little closer to at the money. All those things add to the long delta on the short put side. Then on the upside, selling the 930, 940 call vertical. Now your break evens, it's pretty simple, right? The short put minus the credit is where it breaks even on the downside. The short call plus the credit is where it breaks even on the upside. So remember, you're selling a 930, 940 call vertical, you're collecting $8.50 on the iron condor, so you only have $150 risk on the upside is all you have if it were to go upside. Bigger risk on the downside on this trade. All right, now there's our Netflix trade. Now let's get to our second trade, and that is Nvidia. You know, Nvidia has stalled a bit from its highs above 153. If you look at the chart, it hit 153.13. It's come down a little bit off that, now starting to firm up here around 137. It's almost trading 139 now this morning, up a full percent. So what do we look at Nvidia? This is still a company that the AI-driven growth of this company is unmatched by anyone. It's virtually, the whispers of monopoly are all over this because no one can seem to close the gap. But regulatory problems are on the horizon, and customer needs are shifting, and what is going to be the future? What inning is Nvidia in? There's all the concerns about Nvidia that have caused it to stall up here. Remember, it hit 140 for the first time. Last June is the first time it closed. It traded 140, and it's still trading right around $140. So it's been range bound now for quite a while, even though earnings are still expected to grow 55 to 60% through full year 2026. This is a company still in the early stages. And then here's the question that everyone has to answer. What's in the pipeline for Nvidia? Are they getting into healthcare? Are they getting into other companies? What's the next thing? Much like we talk about with Tesla, what's in the pipeline for Nvidia that we don't even know about yet? We know there's a chip behind Blackwell, right? So the way we want to trade this is quite simple. We're going to do the long call diagonal buying. We're going to give ourselves some time going out to February 14th, buying the 139 call, kind of at the money call, then selling this week's January 24th, 144 call. All I did, basically, whenever the stock's trading, buy the at the money, about a month out, sell, look at the expected move, which for this week is about $4.50, $4.30 to be exact, and sell that short call. Use that as the long call diagonal. That's the look we're doing in Nvidia. Now, it gives you about 37 long deltas. It's collecting theta each day. That number will pick up, and you're looking for a move up towards the 144 strike. Now, if it gets up there, remember, you're spending $5.30 is where we put it in. It's trading about $5.20 now. That's more than the width of the strike. So you have to be a little careful. If it gets up towards that short strike, you either want to close the trade or make an adjustment on your strikes. So make sure you understand that call diagonal. So the risk is the amount paid. Whatever the debit is, there's your risk on the trade. So you're looking for a move from where it is now up towards the 144 strike in Nvidia. Like I said, about 37 deltas per trade. All right, those are our trades today. A short iron condor in NFLX ahead of their earnings and their inflated implied volatility, but one with a little attitude, giving you a little bit long delta, and then a long call diagonal in Nvidia. That's our show for today. That's all for Daily Trader. We'll see you tomorrow with another edition of Daily Trader. I'm Kevin Hincks.